Think about every single thing you were taught growing up. How to solve equations you've never used since. The causes of wars that ended centuries before you were born. The exact process of photosynthesis. Maybe even how to write in cursive. A skill so useful, you've used it approximately 0 times in your adult life. Now ask yourself one question. Did anyone, a teacher, a parent, a mentor, anyone, ever sit you down and properly explain how money works? Not in passing. Not a vague, save more, spend less. Actually explain it. How taxes are calculated. How debt spirals. How inflation quietly eats your savings while you sleep. How the right money decisions made early could quite literally change the entire trajectory of your life. For most people, the answer is no, and that's not bad luck. That's not your school being uniquely terrible. That's a pattern playing out in almost every classroom, in almost every country, for almost every student. Today, we're changing that. Welcome to the Fiscal Journal, where money finally makes sense. Let's start with the obvious question, why? Why did you spend years learning things you've genuinely never used, but nobody once explained how a mortgage works, or why inflation quietly destroys your savings, or what actually happens to your money when it just sits in a bank account doing nothing? There are a few reasons for this, and none of them are particularly reassuring. The first reason is that school curriculums are largely designed by governments. And governments, broadly speaking, benefit from a population that earns money, spends money, pays taxes, and doesn't ask too many questions about how the system is structured. That sounds cynical. But follow the logic. A financially educated population would demand better retirement systems, push back on unfair tax structures, and be far less likely to fall into the debt traps that keep consumer spending, and therefore the economy, moving. The second reason is arguably worse. Most teachers were never taught this either. It's a cycle. A generation that doesn't understand money raises a generation that doesn't understand money. And the cycle just keeps going. And the third reason, financial products are complicated on purpose. Banks, lenders, insurance companies, they make significantly more money when you don't fully understand what you're signing up for. Complexity is profitable. Clarity is not. So the system isn't broken. For certain people, it's working exactly as intended. The question is, are you going to keep letting it work against you? Let's fix it, right now. Here are 5 fundamental things about money that should have been on every school curriculum, and what you need to understand about each one. Number 1, how compound interest works, and why time is the single most valuable financial asset you will ever have. Here is the simplest version possible. If you invest $1,000 today and it grows at 8% per year, which is a realistic long-term average for a diversified stock market investment. After 10 years, you have roughly $2,159. After 30 years, you have over $10,000. You put in $1,000. You got back 10 times that. You didn't work extra hours for it. You didn't hustle for it. You didn't do anything. Time did it for you. Now here's where it gets serious. If you wait just 10 years to start, you've lost the most powerful decade of your entire financial life. That one delay could cost you tens of thousands of dollars, sometimes hundreds of thousands, depending on how much you invest. This is the single most important concept in all of personal finance. The fact that nobody explained it to you at 16 when you could have actually done something meaningful about it is one of the greatest failures of modern education. Full stop. The good news is you're hearing it now. And the best time to start is always today. Number 2, how taxes actually work. Most people believe that if they earn more money, they could somehow end up taking home less, that a pay rise might push them into a higher tax bracket and leave them worse off than before. This is completely false, and it's a myth that costs people real money because it stops them from negotiating salaries, accepting promotions, and understanding their own paychecks. Here's how it actually works. You don't pay the higher rate on all of your income. You pay each rate only on the portion of your income that falls within that specific bracket. So let's take a real example. Say you earn $55,000 a year. The first $11,600 gets taxed at just 10%. The next chunk up to $47,150 gets taxed at 12%. And only the small amount above that gets taxed at 22%. 3 different rates, 3 different slices. Never your whole salary at once. Only the dollars above that line get taxed at the higher rate. Not everything. Never everything. Understanding this single concept changes how you negotiate your salary. It changes how you think about retirement contributions and how they reduce your taxable income. It changes how you read your paycheck every single month. Most people are paying more tax than they need to simply because they never understood how the system works. Now you do. Number 3, inflation. The silent tax that nobody ever explained. Right now, if your money is sitting in a standard savings account, it's probably earning somewhere between 3 and 5% interest per year, depending on your bank. Sounds reasonable, right? Except inflation, the rate at which the prices of everyday things rise each year, has historically averaged around 2 to 3%, and in recent years it's been significantly higher than that, which means, in real terms, in terms of what your money can actually buy, your savings might be barely moving, or quietly going backwards. The dollar sitting in your account today will buy less next year than it does right now. Not because you spent it, not because anything went wrong, just because of time and inflation doing what they always do. This is why keeping all of your money in cash long-term isn't saving. It's slowly losing, and almost nobody explained that to you. Number 4, how debt is specifically designed to trap you. Not all debt is equal. There is debt that can work in your favor. A mortgage on a property that grows in value over time, for example. Or a student loan structured in a way that only becomes repayable once your income reaches a certain level. But then there is consumer debt, credit cards, buy now, pay later schemes, store financing, payday loans. These products are engineered, and that is exactly the right word, to keep you paying for as long as possible. A credit card charging 20% interest on a $2,000 balance where you only make the minimum payment each month. You could be paying that off for over a decade, and you'll end up paying close to double the original amount by the time you're done. The people who designed these products understand compound interest perfectly. They're just using it against you instead of for you. Knowing the difference between debt that builds wealth and debt that destroys it. That single lesson alone could save the average person tens of thousands of dollars over the course of their lifetime. Number 5, how to actually manage money. The basics of a budget that works, not complicated spreadsheets, not tracking every single purchase obsessively. Just a simple framework that gives your money direction. The one that works for most people starting out is the 50-30-20 rule. 50% of your take-home pay goes to needs. Rent, bills, groceries, transport, the things that aren't optional. 30% goes to wants. Eating out, subscriptions, hobbies, the things that make life enjoyable. 20% goes to savings and investments. Your future self. Now, those percentages aren't perfect for everyone. If you're in an expensive city, your needs percentage will naturally be higher. If you're early in your career, your savings percentage might be lower at first. The exact numbers matter less than the principle behind them. Every dollar you earn should have a job before you spend it. Most people do the opposite. They spend first and save whatever is left over, which is usually nothing. The people who build real wealth do it the other way around. They save first and spend whatever is left. That single mental shift, that one change in how you approach your income, is worth more than any stock tip or investment hack you'll ever hear. Here is the uncomfortable truth. The fact that school didn't teach you any of this, that is not your fault. The system failed you on this one. Genuinely. But staying financially illiterate from this point forward? That part is on you, because the information exists. It's not locked behind expensive courses or financial advisors charging hundreds of dollars an hour. You just need to decide to start. Start by understanding compound interest and opening an investment account even if you only put $25 a month in. The amount matters less than the habit. Start by looking at your paycheck and actually understanding where your money goes before it ever reaches your bank account. Start by checking what interest rate your savings account is paying and comparing it to the current rate of inflation. Start by writing down every debt you have, the interest rate attached to each one, and making a plan to attack the most expensive one first. And start by giving every dollar you earn a clear purpose before you spend it. None of this is complicated. It was just never explained to you. Until now. That's exactly what this channel is here for. Every single week on the Fiscal Journal, we take the things about money that feel confusing, overwhelming, or just plain boring, and we make them simple, not dumbed down, not watered down, just genuinely clear. Because the difference between the people who build real wealth and the people who wonder where their money went every month, it's almost never income, it's almost never luck, it's knowledge, and the willingness to act on it. Next week, we're getting into something that honestly surprises most people when they first hear it. Your brain, the thing you trust to make every decision in your life, is actively working against your financial goals. Not because you're bad with money, but because of the way human brains are literally wired. We're going to break down exactly how it happens and exactly what you can do to fight back. You don't want to miss that one. If this video gave you something useful, subscribe. It's free. It takes 2 seconds, and every week we'll give you something that actually moves the needle on your financial life. I'll see you next week.